Hey, what's going on, guys? I had a few people ask me or say to me that they were having a hard time drawing zones, drawing macro zones and drawing micro zones, and they were just having a difficult time understanding how to map them out. So I'm gonna dedicate this video right here. I'm gonna just do three for you, really try to make it as quick as possible, but also give you the full understanding. I'm gonna do three tickers. You can see I've cleared my screen here. Oh, actually, I left a couple because I was doing something for someone else, but I'm gonna draw out some macro zones here, and I'm gonna explain how I draw that zone. Draw out the macro zones, and I'm also gonna draw micro zones, which are a little more tricky, but they're still just as valid. Now, I'll also say that I can't I can't tell you what kind of trader to be. Okay, I, and I also can't say, you know, what's a reasonable profit for you to, aim for, if you will, and a reasonable target. That's all going to be dependent on you as an individual and your own style. Um, Everyone's different. Everyone has different risk tolerance. Me, I do both. I swing and I day trade. So I do a little bit of a mix. It just depends on the scenario, right? I have a weapon for each kind of job. It depends on what's happening. I also can't tell you, how many days to expiration you should be swinging, because that's all going to be target dependent. So again, it's you have to ask yourself, like, what kind of trader do I want to be, right? Do I want to sit there at the desk, and watch tick by tick all day long? Do I have the time to do that? Or do I want to get something? Do I want to get something and hold it for a few days and let it play out, or do I want to get something and hold it for maybe a few weeks and let it play out, right? Or um, so that's up for you to decide. But what I am going to help you, you know, um, figure out here is how to draw your zones, so at least you can take the high probability trades in the zone. And I've already discussed in previous video, kind of what to look for in the zones, but I will touch on that briefly. So, anyways, let's dig in. First things first. When I'm looking to draw a zone, right? When I'm looking to draw a zone, I first, before anything else, I like to get some bias, right? I like to get a little bit of bias just so I can determine what is going to be a high probability trade and a low probability trade. So the difference between the two is that the the high probability trades, they should have a farther target, and a low probability trade should have a much closer target. Okay, so that's the first thing, before anything. So that so what I like to do, I'll hop on a monthly chart. Okay, the monthly chart gives me my bias. All right, so if we're looking at the last few months, right? Well, the monthly chart, in terms of being biased, it's a down, it's downtrend, right? So you have 3 red months in a row, but it doesn't mean that you can't get slammed with a green month in between those red ones, right? Because a lot of traders fail to understand that it's not just a straight line down. It's a staircase, right? Like if you were examining this in terms of movement, right? Like let's say you were starting from December, it's this is how your month your months would have looked, right? It's like this, okay? So you have this kind of staircase movement, if you will, right? You know, it's like that. So it's not just a straight line, and you have to play that that staircase. And I mean, it's the same thing here. It's not. I mean, this is just an abnormal situation, but you know, it still has that, you know, that movement in between. So, all right. Anyways, I like to get my monthly bias so I can determine my high probability and low probability trade. Okay, so we start on the monthly chart. Monthly chart was just red. All right, but now it's red, it's solid red, but it's also closing at this low here. So, and we're closing at what I consider a pivot point. And you can see where that pivoted 2 times beforehand. Okay, so you have to be mindful of that. So you have your bias, but you have to be mindful when you're on a pivot line, if you will. So then I'll jump down to a weekly chart. Okay, and just kind of see where I'm at. All right, well, I just had 4 red weeks in a row with no green in between, nothing. You know, you again, it should be a staircase. You know, it should be broken up with opposing color in between. You know, rarely do you get a situation like this where it's just 1, 2, 3, 4, 5 weeks, and then, you know, fifth week you get a red one. Okay, and it gets broken up. So 1, 2, 3, 4, 4 red weeks in a row looks a little overextended to me, and it's very close. It is slightly below it, but it is very close to this pivot line here where it's bounced very, very hard. Okay, so I'm expecting that there's still strong orders still sitting there. All right. So then I'm just determining my bias. You know, right now my bias has been red, but again, we are sitting on a pivot line. Anytime I'm on a pivot line, right? Like let's say up here, if I had 1, 2, 3 weeks in a row, but I'm up here on this pivot line where it's switched sides before, I have to be very mindful of, you know, of this turnaround that, sorry, I messed that up. This turnaround point right up here where it's U-turned on me before very strongly and brought me back down. Same thing here in reverse, right? I have to be mindful. I have to be mindful of, you know, this space here, right? Like even though it's broken it, right? Even though it's broken it, I still have to be mindful until I see something like this where it's really strong leaving that zone, like really pushing away from it. That's when I can get, you know, way more bearish, if you will. Same thing on the opposing side. If I see this break real heavy up here, right, to the upside, okay, that's when I can get more bullish and, you know, maybe start looking at targets up here. Okay, all right. So mindful of pivot points, but, you know, still trying to determine your high probability and low probability trade. At this point, my personal opinion, this is just my view, the high probability trade at this point is that this staircase is going to be broken up with a green week, just because you've had 4 weeks in a row. It's pretty rare that you're going to have that many weeks in a row, you know, solid red without a bounce. Okay, you know, stocks, they like to go up, so, you know, it's pretty rare you're gonna get that. So, you know, you can see that here. You know, you had 4 weeks right there, and then it followed with a green. You had 3 weeks right there, and it followed with a green. You know, and then a few more after it. So, even though I do think that we are in a bear market, you have to be, or we're coming into a recession. That's just my thoughts. You have to be mindful that there's still going to be pumps and short squeezes as we descend lower, right? Especially with the chaotic week that is coming up right now. So, and I don't think the Fed is going to wreck the market. I don't think so. In fact, I think it's going to do quite the opposite. This is what happened from the last Fed meeting when all the shorts and put holders thought it was going to get wrecked. It did the exact opposite. So this is like contrarian thinking. All right. So moving on. All right, 4-hour chart, right? If I was on a 4-hour chart, okay, let's draw some zones. So what's the most important thing about zones? Well, how do we identify them? So the way that we identify a zone Okay, I like to start when I actually start to draw the zone. I like to start on the 4-hour chart. The most important things to to me when drawing a zone is the strength of the candle and how far it traveled from the origin and the volume that's associated with the impulsive movement. So maybe you want to write that down. The strength of the candle, okay? Strength of the candle, the the volume that's associated with the impulsive move, and how far it traveled from the origin, okay? All right. So when you're looking at a chart like this, right? This is multiple months. It's from January all the way to Friday at the close. You're trying to identify where the biggest U-turns took place, okay? Where a trend ended, if you will, right? That's what you're trying to figure out. You're trying to figure out where that trend ended, okay? Let me get a little bit more here so we can get December in there. You're trying to figure out where that trend ended and where that U-turn took place, and then where the strongest signals are, okay? All right. These are not, these little guys right here, these are not strong signals. This is a strong signal, okay? This is a U-turn, all right? This is a very strong impulsive move breaking this trend. See all these before? These are strong signals just going in the trend line. You can see how powerful they are. They're almost full body, no wick, just in line, okay? Until eventually it gets to the point where the trend reverses and you have a 4-hour candle that closes above the open price of the day, which is a reversal. All right. So this already is, if I was drawing a zone, if I was back here, right? If I'm on this time frame, I'm going to go from this base of this wick or the base of this body to the tip of this wick. Okay. And I'll start to draw my zone. Okay. Like this. 1, 2. Okay, I'm going to make those green because it's a buy zone. Make the line a little bit thicker. That way you can see it more clearly. Okay, like so. And I'll draw my buy zone. Now my assumption here is that after traveling from 334 to 353 in a day, okay, I'm going to do a $20 movement, that the next time price comes down into this zone, okay, there is most likely going to be very strong buy orders sitting in there, because look at the strength of these candles and look how far it traveled and look at the volume associated with it. Okay, look how much volume is up here in the top right. Okay, we got 126 and 63, all right, versus like an average volume day, which is 40 and 40 and 27 and 50 and 27 and 44 and 23 and 52. Okay, here you got 126 and 60, well, 64 really. Okay, this is a very high volume day, and the strength of these candles are really powerful. All right, so that is a zone for me. That's gonna be a macro zone, because the macro zone, or the reason it's macro is because it broke this macro trend line, which was bleeding out for weeks. Okay, and if this is what reversed it, this is what triggered the reversal. Now, even on, I know what these days were. This was the FOMC meeting that week. Even on a day which was somewhat bad news for the market, it only the BFI doesn't I mean, they care, but they don't to an extent. Okay, they are concerned with making money. When everyone thinks that they should be selling, look what happens when it comes down into this zone. Okay, it has another very strong impulsive move leaving the zone. Now, if I was looking for a place that I would be selling, right? Well, I'm gonna look forward. I'm gonna look back in time and see where the biggest impulsive moves were when those positions were sold off. Well, it's right here. These 2 days right here. All right. So these were the biggest impulsive moves. So I can make an assumption that maybe when we get when we get to this price here, right, somewhere in this range, okay, that there's probably still big sell orders sitting there, right? And a little note for you is the first time a price retests, okay, is the best deal. So here you had the first touch, right? Here you had the first touch. The next time it came into this zone was here, and that was the best deal, okay? Same thing on the upside. The first time it came and touched and got up to this price, if you were going to take the short position, this was the best deal, okay? This was the best deal. But the second time it tried to come up there, it was not as good of a deal, okay? Because it wasn't able to come all the way up into this macro zone, or deep into it, I should say. It traded a little bit lower. So if you were trying to draw perhaps that sell zone, typically I like to go the base of the candle to the tip of the wick. But ultimately, what you have to be mindful of is that it's not always going to be that clear. It's not always going to be perfect, because you have to be fluid as a trader, and teaching fluidity is just a matter of screen time and practice. Okay, so the more valid a macro zone is the more touches it has. So like this line here, for example, where you have this touch here, you have this touch here, you have this touch here, this touch here, this touch here, touch, 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 touch. You only have one touching here, which is like a deep value price, right? But you have all these touches along this line. So this 340 level at this time in this ETF cycle was the most valid price level, okay? And this is a deep value price, okay? Now, moving up onto the sell zone, on the sell zone side of things, right? This is not as valid because you only got that one single retest, right? This price here, this zone, if you will, is much more valid, right? So let's just move these here. You have to understand that these zones, they do shift and move over time. Now macro ones they tend to be more rigid, but micro ones are much more easily wiped, and we're just focusing on the macro perspective right now. So, if you were trading this, right, this is giving you the indication, like let's say you saw this first day of coming red for 4 hours, right? It's something that's red like that for 4 hours, it's probably going to, it's probably starting a new trend, okay? So it's most likely, especially after having 1, 2, 3 days of running, solid, and it's ran from 337 to 372. It's like, how far do you want this to run? Like that's a pretty substantial run. So it doesn't, stocks they don't just go up forever and they don't just fall forever. So, which is why it's important to set targets. Maybe your target from this zone was here, where you saw this, this selling taking place, right, after this big impulsive move. Maybe that was a maybe that was a target for you, and that's up for you as the trader to decide, right? Like what a valid target is, right? So maybe that target was, you know, maybe it was there, right? Maybe you're like, hey, I want to, do a run from 337 to, what is this, 355? A $20 run, that's good. So, and that also, that also is going to influence your decision making on your DTE and your days to expiration on your option selection. So, maybe you want to give yourself a little time for that movement to take place. This you maybe got lucky on, and you just got a a 1 day move. But I always like to recommend, especially for beginners, buy a little time, buy 5 days, a week. Give yourself some time, and once it gets to the target, close it. Like, take profit and go on to the next trade. So, and just trade zone to zone. So, anyways, moving on. This is showing you how valid this zone was, right? So look at the strength of this impulsive move, and look at the strength of this impulsive move. Then when the day opens up, this is a rejection candle. This is rejecting this zone. It comes up into the zone and immediately just rejects, right? So it's letting you know that this macro sell zone here is very valid, right? And you'll see when we move forward in time how valid that macro sell zone still is, okay? So that is a valid zone, right? And you can see even where it did extend a little bit beyond to the very top of this zone prior, right? Look at that, okay? Now that is not as valid. That's a deep value price there. But the more valid zone is in this range, right here, okay? Because you're looking for the biggest impulsive moves and where they took place, okay? So you can see how that zone, that macro zone, was still very valid, right? Now, hopefully that gave you a good understanding of, how to examine that, if you will, on a macro perspective. Now you may be looking at this chart and asking the question of, hey, Eric, well, I see this breaking this macro zone, right? Well, yeah, I mean that occurs. Now it happens. It's less likely to happen, right? So like you can see how it's it's bounced in that zone a few times, right? It's bounced, but something to be mindful of is if there's a break of the zone, right? If there's a break like this, there's a break of the zone. It's what I like to call zone wipeout, right? So like you can see how it broke this zone, but then it retraced right back into it, right? And then it tried to break it again and it pulled back again. It's because there's still those big buy orders sitting in there from this, right? And they're trying to maintain that zone and protect it, okay? And this day is when the Ukraine war broke out, right? Now look at the strength of these candles here, right? Look at the strength of this, right? So now we're developing perhaps a new zone, and this is a much stronger impulsive move than this. So we can make an assumption that the next time price comes into this space here, that there will most likely be very large buy orders protecting and adding to that position. Okay, so let's just make those green, right? And you can see how that played out there, and it played out there, and it played out there, before eventually moving on beyond that zone and taking a run to the next macro zone, from zone to zone, okay? And then reversing out of this macro sell zone and going zone to zone. Now, we did break this zone a little bit, but you can see how even though it broke that zone momentarily, okay, even though it broke that zone, I think this was an earnings miss after hours is what happened here. It was immediately protected and went on a $20 run from 311 to 330. Now, it broke it again, right? But we'll see what happens on Monday. If this level was to get broken, right, then I would look for another leg down to start drawing a new zone, right? And that might be a micro zone, it could be a macro zone, but ultimately we try not to predict, we try to just react to what we see. So for me, when I see price, like last week, when I saw this big dip after hours, I tagged some calls and I rode those up until this micro sell zone up here. We haven't gotten to micro yet, but I'll explain that later. Um, but that was a nice easy play. Same thing on Friday. I closed all my puts out into this lower price level, but I did buy a small call position because the last time this price was here, it went on a $20 run, despite what the market may see as pending bad news coming up. Same thing here. This was the pre-FOMC meeting, right? It had a big red day just like this, and then it had a $20 pump before the meeting, which was here, and then a $30 pump after the meeting. So now we're almost repeating history the exact same way. We're closing almost at the exact same price with the same kind of movement, bleeding red before coming into the meeting. Now we'll see if we reverse tomorrow. So anyways, I'm going to draw out a couple more macro zones on two more tickers just to give you another feel of it, a better feel of it. I'm going to draw Exxon, okay, because it's just one I've been trading a lot. All right, same thing here. Where did the biggest impulsive moves take place? How far, did they travel from the origin? And what was the volume associated with the movement or the reversal? Okay. All right. The biggest impulsive moves I can see on this chart, I have this one here, 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 okay? And I have these over here, all right? And I have this move here. All right, let's draw it out. Here is our sell zone up here, okay? Just make it nice and simple. Boom, boom, right? And here is our buy zone. 1, 2, right? And that's a more of a macro perspective there because that is the origin of where this impulsive move took place. You can see how it was protected there. Despite a red day, you can see how that support held up. Even though it dipped below it for a single day, it immediately reversed right back into the macro zone because that position that has been previously built up over here and this big volume here, this big position that was built up in this price level, okay, and how far that traveled, that position is added to and protected, okay? Now, they want to buy there and they want to sell up here. All right, great, nice and simple. All right, so we can make the assumption that after they're done selling up here, when price does come back down into this macro zone right here, right, which has been validated once, twice, 3, 4, 5 times, that there's probably still big buy orders sitting there. No surprise to us, there was. Okay, now another strong impulsive move took place coming off of that macro zone, which developed a micro zone. Okay, let's just examine that really quickly. Okay, let's take a look at that. All right, so we have a nice strong impulsive move from 78 to 82, right? We have a nice strong move there, developing a microzone. Well, we can assume that the next time that it comes down into this price level, it will probably bounce again. Look what happened there. Nice little bounce. Look what happened here. Same exact price. Full reversal. 4 hours of red down into the zone. Full reversal for the day with on a 4-hour candle and then leaving it the following days coming into the earnings. So now where would be our micro sell zone, right? If we were trading in between, well, it'd be right here, 1 and 2, where you can see that there was quite a bit of selling that took place in that region, right? So even though price had a nice green day, as soon as it came up towards this sell zone, it rejected. Okay, and here, but you have to be mindful that zones can get wiped, right? So zones can get wiped, and if they do, you can expect more upside or downside. Same thing, right? So it's like, all right, it rejects this macro zone. It wasn't able to break out beyond it, right? And it breaks down and it runs from zone to zone, okay, from macro to micro before reversing. Okay, it never gets down to this macro again because they're protecting that position before it even gets there. Okay, so and they're still selling up here, and that macro zone is still hasn't able to break it. So stocks, people like to look at stocks as trend lines, right? But I like to look at them as range. They range 80% of the time. Only 20% of the time do they have a trend line like this, right? But most of the time spent is ranging, you know. So it's not often that it's it's going to just develop a trend line and keep running. So hopefully that gave you a little bit of understanding on another macro perspective. I'm going to just do Facebook here real quick. This was a nice, easy one. All right. You have a big earnings miss. We're on a 4-hour chart. Okay. After the earnings, now we have to basically disregard everything that's up here because it's irrelevant to us because we have this big gap down, right? All right. Now, after the earnings, where are the biggest impulsive moves taking place? Well, we have a trend line, right, where it's just bleeding out from that negative earnings momentum, right? Biggest impulsive move that I can see in this whole time frame is right here. That's where my eyes jump to as a potential place to sell, right? Because this had the biggest impulsive move, and that's has the most interest to me. So I'm looking for potential more sell orders still sitting in that region, right? Now you can see there's really no wick, right? But where the selling originated basically is where I'm drawing from. So I like to draw from the body in a situation like this, right? Where it originated, because the wick is less valid, the body is stronger. So I'll go like this. Where did the selling originated? And I'll give myself a little bit of room on that, right? So a little bit of a space, if you will, right? So like this is where the strongest orders took place, right? And you can see how strong it was because there's no wick. I'll validate it further by jumping on a 15-minute time frame, right? Even on a macro, like let's say there's no wick and I want to validate it further. And this is the last macro I'm going to do before I jump to micro. And this video is already getting pretty long, so I don't want to keep you forever. But I'll jump on 15 to validate it further, right? Just to give me a little bit better clarity, and I can see, okay, here is maybe more valid, right? Where that price originated, where that change of price originated, I should say. So this would be a zone trying to get the most touches here, right? So that'd be a more valid place for me to look, right? Because there's not so much wick, it's just full body movements, okay? So now that's an interest of me. Now I'm still staying on this trend line, waiting for it to turn around, right? Well, let's take a look here. Where's the next impulsive move in terms of buying? Okay, where did that take place, if you will? Where was the strongest one? It's right there. That one, right there. A little bit higher volume and just a solid green day, breaking this trend line. All right, cool. Again, there's no wick here, so I can't do base of candle to tip of wick. So that's where I would jump on 15, okay, to give myself a little bit better clarity of where that U-turn took place, okay? So it's right here, all right? So where did that U-turn take place? All right, here's that first impulsive move, breaking that trend line. So this may be a potential buy zone like that, where that exchange took place and U-turned out of it. Okay, so let's make those green. Let's make that green, and let's see what happened moving forward from this zone. Okay, very strong impulsive move. Look at that. Just runs from one edge of the screen to the other, just solid, right? So there's a position being built up. Beautiful. Now it never comes back up to this zone up here, this zone of interest. So we just wait. We just wait, and we wait for a confirmation, right? You don't want to chase price because you have nothing. You have no data. All you have here is just selling. So you don't want to be buying position expecting it to run further because you don't have any data. So let's just wait. Let's just wait, especially when a stock is in a downtrend, right? It's coming off negative ER. I went over that with you in the last video. Okay. All right. Look what happens when it comes back down into this zone. All right, it's trying to stage a U-turn. It's touching again. It's touching in and U-turns out of it. Touches again, U-turns out of it. Touches again and U-turns out of it. Falls below it again momentarily, and this is what you call buy stacking. Buying, the BFI is buying, others are selling. They're buying and others are selling, and they're going to just keep buying and stacking that order up because they're getting ready to take it on a run before they sell it again. Okay, and then eventually it does leave the zone, right? So that zone was validated multiple times. U-turn, 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 and then eventually leaves the zone. All right, and then takes a run up. Ended up right at the very edge of it, right? So if you were on that trade, if you were running macro to macro, right, macro zone to macro zone, then that would have been actually just like a perfect trade if you would have exited right there. And I'm just drawing this on the fly. So, and then you would take your short position from there, right, and just let it run from zone to zone, zone to zone. You don't have any micro zone here. I should mention on this particular stock, there's no micro zone that developed because it was just a solid move that never ranged at any time during this whole cycle. So you don't want to always be looking for it, especially when it's just on a solid trend line like that, right? So it comes off this sell zone, it's coming into the earnings, right? Now remember what I said about breaking zones, right? Well, it's breaking this zone on a very strong impulsive move, so you can expect more downside, which is exactly what occurs, right? It's breaking through that zone, which you had validated before, right there at 185, and it falls all the way down another 15, 20 bucks almost. Falls even further, before ER, which may or may not turn this stock around, but looks like it's already meeting some resistance right there, but we'll see. But hopefully I gave you those 3 examples and that gave you a little bit better clarity on drawing zones, right? Looking for places of strong impulsive moves, volume that goes with it, where the biggest U-turns have taken place on the chart, right? You can see them more clearly, where you can see that U-turn. You can see that U-turn. You can see that U-turn, right? So, hopefully that gave you a little bit better understanding. I'm just going to touch on the micro view real quick. Now the micro, it can shift, okay? Let's jump on a 15 chart. So I'll go 15, and I want to look at a week, all right? Now I'll look at what has occurred beforehand, right? So I'll look at this up here. Let's just get rid of this. I'm just going to clear all this off, right? Again, this depends on what kind of trader you are. But if you want to trade micro zones, you can. I do both. So again, with the impulsive moves, look how strong this impulsive move is, okay? But then look how strong this impulsive move is, right? If you were starting off this week, I'm not sure what day this is, Monday or Tuesday or what have you, right? But that's the kind of movement you're looking for to draw a micro zone, okay? Reject, retest, reject. I mean, it doesn't get any more perfect than that, okay? So here's our sell zone up here. Excuse me. Here's our sell zone up here, right from the start of this week, okay? We're looking for those big impulsive moves and those U-turns where that trend breaks. This right here, okay, the bottom of this chart could have been potentially signaling to you that this is about to break. You follow it through into after hours and pre-market, it does. That's a U-turn, right? Like this is a very clear U-turn. It's like that, right? Like that's a U-turn. So it's on a micro level though, right? So it's like that. That's a U-turn. So you can assume that if and when it does get down into this zone here again, right, which would be maybe something like that, right? Maybe something like that in that range, if you will, where these candles have developed and they're starting to, you know, meet that. They met that bearish candle with solid green for almost an hour straight. So you can assume that if price came down into that range, because it did have a nice bounce, right, that it might have another bounce from there. And it did. Bounce from here, shot back up into this zone that we established before, and then did the exact same thing. Valid sell zone, validated by leaving this zone with this massive bearish engulfing candle, zone to zone. All right, cool. Came back down into our buy zone, fell below it momentarily, but look what it's met with. Big buy orders, stacking up, okay? Boom, shoots off from our micro buy zone to our micro sell zone. What's it met with? More selling. Tries for a retest, more selling. Great. Didn't quite get to the sells or to the buy zone there. Didn't quite get to it. So hopefully you had a little more time. You weren't just running a 0 DTE. Came back up for a retest. Double top situation. Not only does it fall into the buy zone, you can see there was a couple buy orders left, but sliced through it. Now, when price sliced through a zone, I always expect, you know, more continuation, which is exactly what it does. Falls through the zone, keeps falling. All the way down, fell all the way to our macro zone, which I've deleted, but is down here, right? But you can see now that we left this micro zone, if I was going to draw a new micro zone, right? All right, so we left that zone, and we kept falling all the way down. But where was the biggest impulsive move that took place? Well, it was right here, in this range here, right? Where this buying, this is somewhat weak trend line, right? Weak candles, but it exhausted here in this range right there before that U-turn took place on a micro level. So that could be a new potential sell zone for us on a micro time frame. And I'm just drawing this for you on the fly. And this is exactly the same way I do it when I'm trading. So that's a point of interest for me up there. Now I know that this is a macro zone down here. So that zone is already well respected, right? So if I had my green lines up, you know, they'd be like that, right? So that zone has already been pre-established months ago. So, and it was respected. You can see what happened when it came back down into that zone. Okay, bounced up from our macro zone to our new micro zone, met with more sell orders, another retest, zone to zone. This wasn't complicated. It's very simple. Very, very simple. This was not complicated. You had one, two, three moves here. Okay, 3 major moves, which is what I recommend if you're a beginner. Give yourself enough time for it to make the move happen. 5 days to expiration minimum. 3 days if you're a little more risky. I wouldn't recommend 0 and 1 DTEs. Okay, zone to zone trading. Now, what do we expect? We will ultimately react, but what do we expect? This is a macro zone. I expect this macro zone to be protected and a bounce out of that, because this price triggered a $20 run. Okay, despite the FOMC coming up here on these 2 days, I still expect this zone to be protected. If this zone was to be broken, I would expect more downside, just like you saw like this. When a zone gets broken, tends to keep on running for quite a ways. What was this? 339 all the way to 311. So a micro zone got broken and it ran $30. When a macro zone gets broken, whew, you saw that with Netflix actually. Great example. I'm gonna do this last one. Already got a 45-minute video. All right. A macro zone that gets broken, what happens after that? Well, where's the macro zone on this? This is like a monthly zone, I should say. All right, this is the monthly zone where the biggest orders are, which is right here. Okay, you can see how well that was protected. When a monthly zone like that gets broken, you can expect big downside. So when I saw 250 get broken, I just ran Netflix puts since this earnings, by the way, twice. And when I saw this get broken right at the start of the day, when I saw that, I'll just show it to you real quick before I close this video out. When I saw this level get broken, right, I just immediately took puts right here, right at the bell. As soon as it opened, I just opened it up for a month-long put position. Because when a macro zone gets broken, there tends to be huge downside. So you can see it fell all the way to 253. From 253 to 185. It's $70 run almost. Yeah, $70 run, right? And I held those puts for quite a few 100%. And I ended up closing them. I actually closed them out here because you can see on this 15-minute chart why I closed it out, because we opened here and then we U-turned. And when we broke this open price, I stopped out. But I followed it. I was watching the stock still because I was waiting for a re-entry. I saw it melt. I saw it melt from this price level where these big buy orders left and got weak. Right? I saw it melt. Waited to the next day to take that, and I ran this on Friday. That same move. I wish I would have gotten a little bit earlier, but I was focused on my trade plan. That's it. Just like this. Nothing complex. I took the trade right here. Took it like that. Took a put position right there. Okay, right where you see these candles getting weak. So as price opened up during the day, I tagged it here as price was going up, and it U-turned on me. Nice. And I tagged it one more time there, and then I just ran to the bell and closed it out. So I got like 440%, 450% on this multi-day hold, and then I got like another, it was like 110, 120% or something like that on Friday. So, and then we'll see what happens when it comes back down into this price level again, right? So I want to see. So now I'm developing like a micro zone actually on this one, right? So like for me, if I'm doing this, I'm doing this last one. We already got a 50-minute long video, sorry. But if I'm like developing a micro zone, right, I'm going to be looking at it like this. So here's where that price U-turned, okay? And here's where that price U-turned, up here, okay? That's the most valid levels. So this would be an example of a micro zone that I'm just drawing for you on the fly, okay? And if you use the principles that I've outlined in previous video where you have a 15-minute chart and a 4-hour chart side by side next to each other, it makes this really easy to see. Okay, so boom, I don't know why I made this red, but like this would be now a micro zone, and now I expect some bouncing between these zones until it breaks. If it breaks this zone, great. I'll stay in I'll take another put position. I exited my puts. I wanted to go zone to zone, but we didn't get there. So, um, you know, I'm not going to hold it over the weekend and take that theta hit. I'm happy to take my profit because it very well could U-turn here because we have these big buy orders sitting there. So I'll wait to see. But you want to take your highest probability trades are in the zone, right? That's where they are. So, you know, so now I have a little bit of a micro zones developing, and I might take this, you know, a few times until eventually it breaks one direction or the other, you know, and if and when it breaks, I'll just roll with it. I'll roll with it, and I'll, you know, if it breaks to the upside, you know, I'll look here, which had, you know, big selling orders that took place up here. You know, I'll look at this region right up here if it breaks to the upside, and if it breaks that, I'll keep holding, right? So I'll look at that region as a, you know, potential range of where it might tap out. And this is just about like reading candles, right? How well can you read it? So if you can read it, then, you know, like something like this is a clear reversal, and here too it's a clear reversal. So, you know, if you can read it, you can, you know, it just, you want to have at least a point of interest. You know, it's not always going to be perfect, but you want to have a point of interest. Like, hey, when it starts getting close to this zone right here, I really need to start paying attention. Sometimes it will be perfect though, like you saw on QQQ, you know, where it is perfect. Like it was exactly, like look at that, it's like to the penny, you know, it is exactly where it U-turned, right? Same thing here. It's like exact, you know, like there's, you know, sometimes it's real tight, sometimes it's a little bit loose, and that's just going to take seasoning over time for you to be able to, you know, identify that and work with that and just be a little bit more fluid in your trading process. But ultimately, you don't want to trade anything in between until you're good enough to take scalps like that. You know, as a beginner, intermediate, you should just be trading zone to zone. So I'm going to close this video out on that one. That was a lot. Hopefully you guys have a better understanding of that and you're able to draw these a little bit more effectively. You know, micro, 15-minute, give yourself a week, but also being mindful of what happened before. Macro, 4-hour, you know, you want to be looking at a couple months, just see where you are in the environment so you can draw that out. So hopefully that gave you plenty of details that you are able to draw these zones moving forward, and hopefully you'll be able to generate a lot more money now. So I'll see you guys on the next video. I'm probably not going to do another one today because I have a bunch of stuff to do today on Sunday, but I'll probably do something during the week and just kind of revisit what I see and what's happening, and maybe look at a few different tickers like AMD, who has earnings, and Pfizer has earnings this week. You know, so you can go back to my earnings video if you want to see how I might be playing those. You know, pre and post earnings. You know, there's going to be a lot of volume there, and you have the FOMC, so there's just a lot of stuff going on. So, anyways, close this video out. I'll catch you guys on the next one. See ya.